The Amex Black Card requirements. Income, net worth, and approval. Before we start, you may see a few ads. Thank you for letting them play, so I can keep bringing you free, actionable advice. Now let's continue. If you're researching the American Express Centurion Card, commonly known as the Black Card, you're likely evaluating whether this invitation-only product aligns with your wealth management strategy. What I'm sharing represents the institutional framework that wealth advisors reserve for private consultations. And if you're taking notes, you're demonstrating the analytical rigor that separates sophisticated financial operators from those who chase status symbols without understanding capital efficiency dynamics. By the end of this analysis, you'll understand four critical outcomes. First, the actual approval architecture American Express uses to evaluate candidates. Second, the precise cost-benefit calculation measured against alternative capital deployment. Third, how the Centurion Card functions within liability architecture for tax optimization. And fourth, the strategic timing considerations that determine whether this product enhances your financial framework. Let's begin with relationship-based underwriting, the actual mechanism American Express uses to identify Centurion Card candidates. Contrary to popular mythology, there is no published income requirement of $250,000 USD or net worth threshold of $5 million USD. American Express operates through what institutional analysts call relationship scoring, evaluating your total economic relationship across multiple dimensions most applicants misunderstand. The primary metric is annual spending velocity across existing American Express products, with historical data suggesting consistent spend between $250,000 and $500,000 USD annually positions you within consideration. But sophisticated operators gain an edge here. American Express weights certain spending categories more heavily. Business expenses through corporate cards, premium travel expenditures, and merchant categories, signaling wealth accumulation rather than consumption, all factor into customer lifetime value models. This customer lifetime value scoring represents American Express's calculation of your profit potential over decades. They're building probabilistic models about your future economic trajectory based on patterns and tenure. A business owner spending $300,000 USD annually for 5 years may receive invitation, while a recent high-income professional spending the same amount over 18 months typically won't. The temporal dimension signals stability and reduces underwriting risk. Utilization discipline across your existing portfolio matters critically. Maintaining utilization below 10% while demonstrating high absolute spending signals liquidity depth and sophisticated cash flow management. You view credit as float for capital efficiency rather than bridging cash flow shortfalls. The break-even spending threshold determines whether the Centurion Card represents efficient capital allocation. The question isn't whether you can afford the $5,000 USD annual fee. It's whether incremental benefits justify opportunity cost compared to alternatives. For business owners processing significant corporate expenses, tax deductibility as ordinary business expense reduces after-tax cost by 30 to 40% depending on marginal rate and entity structure. The value proposition becomes compelling at $300,000 USD or more annually on premium travel and business expenses. Airline fee credits reaching several $1,000s annually, hotel elite status generating upgrades worth hundreds per stay, and airport lounge access create embedded value recovery. But you must systematically utilize these benefits. Too many fall into the status trap, paying for benefits never monetized. For sophisticated operators, the Centurion Card becomes valuable within properly structured liability separation. Business owners maintaining clear separation should evaluate whether a business Centurion Card processing large vendor payments allows float periods extending 30 to 60 days. This interest-free loan enhances working capital efficiency, and at $200,000 or more monthly, that float generates measurable value in cash conversion cycles. Tax timing implications deserve attention. Charging business expenses in December, but paying the statement in January potentially accelerates deductions into the current year while deferring cash outflow. This timing arbitrage becomes valuable for business owners managing quarterly estimated tax payments. Consult qualified professionals before implementing specific strategies, as circumstances vary significantly. The credit profile optimization framework, maximizing invitation probability, centers on relationship progression, how customers utilize and upgrade within the product ecosystem. The optimal pathway involves starting with gold or platinum, demonstrating consistent high spending for multiple years, maintaining perfect payment history, and gradually increasing spending velocity. American Express detects manufactured spending through merchant category analysis and transaction velocity abnormalities. Suddenly jumping from $50,000 to $300,000 through repetitive low-margin transactions flags as inorganic behavior. Focus on consolidating genuine business and personal premium expenses onto American Express products instead. The capital efficiency comparison against alternatives shows the Centurion Card isn't competing with Chase Sapphire Reserve or Standard Platinum. It operates in a different strategic category. The relevant comparison involves analyzing against the cost of piecing together equivalent benefits separately. Airline elite status, hotel elite status, dedicated concierge services, and priority access to high-demand experiences. When you calculate purchasing these separately, the $5,000 fee becomes efficient bundling rather than luxury excess. The concierge ROI calculation represents the most underutilized benefit. The dedicated team handles everything from securing fully booked restaurant reservations to arranging complex international travel. For executives whose hourly opportunity cost exceeds several $100s, delegating even 10 to 15 hours annually generates quantifiable value exceeding the annual fee. Most cardholders dramatically underutilize this benefit. Because cards without preset limits often aren't included in utilization ratio calculations by credit bureaus, the Centurion Card can improve your overall credit profile by shifting spending away from cards with defined limits. Future borrowing capacity considerations matter for sophisticated operators. Your credit profile is dynamic. You're either enhancing or degrading it through every decision. When positioning for significant future borrowing, pristine payment history on high-value relationships signals creditworthiness to institutional lenders. The Centurion Card creates a halo effect in underwriting models, suggesting sophisticated credit relationship management. However, the hard inquiry and average age of accounts impact represent minor negative factors. For individuals shopping mortgages or major business loans, timing acceptance strategically matters. Within proper asset protection architecture, the Centurion Business Card processes substantial expenses while maintaining separation from personal liability, though American Express requires personal guarantee even on business cards. For business owners in high-liability industries or those with significant wealth to protect, separating expenses onto distinct business cards creates cleaner documentation for tax purposes and litigation defense. The Purchase Protection Framework provides extended warranty protection, purchase protection against damage or theft for 90 days, and return protection. A business owner buying $20,000 in equipment annually can realize thousands in claims over time. Trip cancellation and interruption insurance with coverage limits at $10,000 per trip becomes strategically valuable when booking international business class tickets. While American Express doesn't publish net worth requirements, their models incorporate wealth indicators into approval algorithms. They access consumer reporting databases, including property ownership and investment balances, painting comprehensive pictures of economic position. You cannot manufacture invitation through spending patterns alone if broader financial profile doesn't support sustainability. Statement credit optimization opportunities deserve granular analysis. Various airline fee credits, Uber credits, and periodic benefits accumulate throughout the year. Business owners redirecting corporate expenses to capture these credits drop effective annual fees substantially. This requires benefit arbitrage discipline, systematically identifying every embedded credit and structuring spending to maximize capture. Income verification reality differs from mortgage underwriting. Centurion invitations typically don't involve rigorous documentation requirements. American Express relies on self-reported income cross-referenced against consumer data and demonstrated payment capacity through existing behavior. They infer income from spending patterns rather than requesting tax returns. A business owner consistently paying off $200,000 monthly demonstrates sufficiency more credibly than documentation proves. Geographic availability affects invitation probability and fee structures. The United States, Canada, and United Kingdom represent primary markets. Fee structures vary by region, with U.S. markets commanding highest fees while offering most comprehensive benefits. Canadian cardholders should verify benefits align with Canadian merchant infrastructure, as some U.S.-centric benefits translate imperfectly across borders. The cancellation strategy represents critical consideration. Unlike cards where you downgrade to no annual fee versions, the Centurion operates as terminal product in American Express's hierarchy. If the annual fee no longer justifies benefits, your only option is cancellation, which terminates credit relationships and potentially impacts credit profile. Evaluate with long-term commitment perspective. Canceling signals you weren't the right fit, making re-invitation substantially less likely. Tax deductibility for the annual fee depends on usage pattern and entity structure. For business owners using Centurion Business Card exclusively for business expenses, the $5,000 fee typically qualifies as ordinary and necessary business expense. This creates immediate value through reduced tax liability. Consult qualified tax professionals as circumstances vary. Alternative card comparison should evaluate the Centurion against ultra-premium offerings like JP Morgan Reserve Card. The JP Morgan Reserve requires significant banking relationships but waives annual fees, creating different value calculations. Comparative analysis should incorporate actual spending patterns, premium benefit utilization, and broader banking relationship strategy. Pre-invitation preparation protocol centers on building comprehensive relationships over multiple years. Start with the highest tier card you qualify for. Consolidate premium spending onto this card, focusing on categories signaling wealth rather than manufactured spending. Maintain perfect payment history. A single late payment derails invitation consideration for years. Gradually increase annual spending through organic business growth rather than sudden jumps triggering algorithmic flags. Consider adding authorized users who are high spenders, amplifying total relationship value. Maintain your broader credit profile immaculately. American Express conducts periodic credit reviews impacting standing even after receiving invitation. The institutional lesson is demonstrating sustainable high-value behavior over extended periods rather than gaming short-term metrics. Before we end, let me summarize these critical insights. First, American Express uses relationship-based underwriting focused on spending velocity and customer lifetime value. Approval probability depends on demonstrating sustainable high spending over multiple years. Second, capital efficiency calculation hinges on actual benefit utilization, with concierge service and travel protections creating value only through systematic deployment. Third, business owners should evaluate within comprehensive liability separation and tax optimization frameworks, maintaining documentation supporting deductibility. Fourth, the invitation represents terminal product. Cancellation makes re-invitation unlikely, so ensure long-term commitment before accepting. Here's my verdict. The Centurion Card represents efficient capital allocation for business owners and high-net-worth individuals meeting three criteria. Already spending $300,000 or more annually on premium expenses, systematically utilizing concierge and travel benefits, generating value exceeding the fee, and operating within properly structured entity frameworks allowing tax deductibility. For those failing to meet all three, the Centurion becomes status purchase rather than strategic tool. The final calculation is simple. If embedded benefits save more than $5,000 annually through systematic utilization, and the card strengthens overall financial architecture, then pursuit aligns with institutional-grade wealth management principles. Subscribe for institutional-grade analysis, treating your financial decisions with deserved rigor. Like this video if the framework changed how you evaluate premium credit products. Comment with questions about relationship-based underwriting or capital efficiency optimization. I am not your financial advisor. This content is for educational purposes only. Consult with qualified professionals before making financial decisions.